So we got like 30 minutes. Let's see. So we are starting from basic, from the foundation. Okay. Now, before I give you scheme of work, I just want to make we look at trading as a whole. Trading as a whole. Trading 101. What do you understand by trading, bro?
Well, the act of selling goods now, or services, or commodities to make
Okay.
profits.
Okay, brilliant. Now trading generally means the process of exchanging goods and services for the other. You understand? So you're simply, giving out something to collect something. Okay? You understand? You are exchanging. So when it comes to, trading in the currency market, in the commodity market, or the foreign exchange market, it has to do with buying and selling of either currencies, commodities, metals, gold, silver, whatever. You understand? So you're simply buying and selling. That's called trading. That is trading generally. So that's what I want to look at. The foundation of trading. Trading began thousands of years ago. Thousands. Even during the time of Jesus. Until our next generation, trading will still be in existence. You understand? Because that way they tend to be balanced in life itself, economy itself. If we are all rich, if we are all billionaires, like everybody for the whole world rich, there won't be balance. There has to be poor people and there has to be rich people. Unfortunately, we can't all be rich. You understand? So the person you want to, pay, maybe a mechanic to fix your vehicle or whatever, is rich on his own, he's a billionaire. So he won't offer you any services. There won't be any services to render because we're all rich. So there won't be balance in the economy, there won't be cash flow. You understand? Money will be coming in and going out, you understand, because everybody is just on their own. I'm not sure we will survive. So, so you get now back to trading. You understand? The whole thing all points down to this trading currency pairs and all that. Whenever we want to like maybe travel, when we want to like go from Nigeria to United States of America, we know that we can't use our own currency over there, right? So what do? We exchange it for dollars. We exchange our naira for dollars. We exchange the dollars for Japanese yen. We exchange the Japanese yen for British pounds and all that. You get. So that is trading basically when it comes to currencies. You are exchanging one currency for the other at a given rate. So if you have naira with you, if you have like 1,000 naira with you, and then you say you want to go and buy dollars, and they give you a particular rate, let's say $1,000, sorry, 1,000 per dollar, and then you go to the whatever place they always exchange money, you bureau the change, and they give you a particular rate, let's say 1,300. So if you are buying dollar at 1,000 naira, and you go to exchange your dollar, how do I put it? You go to exchange your money, and then you hear that rate is 1,500, and then you bought dollar when dollar was at let's say 1,000 naira or something. If you go to exchange when dollar gets to 1,500, you tend to make profit on that exchange. Yes or yes?
Yeah.
That is how it is. So if you have been holding a particular asset for some period of time when when the price was still at its all-time low, right? You're holding a particular asset when its value was still at an all-time low. Let's assume you bought something. Yeah, this is a graph. You bought a particular asset or commodity or whatever instrument. Yeah. And then all of a sudden you hear that so price the value went up 10% or so, and this is its current value. Why you add this piece of asset here, and you go to sell it, you tend to have more profits. You understand? You tend to have more profits. It's just like you're buying properties, you're buying land. Okay, you bought land here. This is let's say this is 2005. You bought like 10 properties in Lekki. You bought like 10 pieces of land in Lekki 2005 at let's say 100,000 naira. Yeah. 100,000 naira. Yeah. Then this is 2024. 2024. And you hear that a land now in Lekki is 20 million. Let's put 20 million here. Now, you bought 10 pieces of land here. Each land you bought here was 100,000 naira. That means you spent 1,000,000 naira to acquire 10 of these lands here in 2005. And then all of a sudden, price went, the value of dollar went all the way up to where it is right now. And then a piece of land there cost about 20 million. So if you are timesing it by 10, that should be around what? 2, 4, 6, 8, 10, 4, 6, 8, 10.
200 million.
That's 200 million. You understand? So this is how the market moves. This is how market moves. So if you bought here at 20 million, 2024, if you bought here at 2024, please follow the illustration. It will really help you. 2024, you bought a piece of land at, although I'm just using it as an example, land will never depreciate. Yeah, you get. So you bought a piece of property here, 20 million. And then down the line in, let's say this is 2030. This is 2030. Or let's use 2030. The value of that asset depreciates. It tanked. Let's use it as a stock. Let's say this is a stock. You bought UBA stock, yeah, at 20 million in 2024, and then UBA tanked. UBA stock tanked in 2030. It tanked up to, like, let's say a share now is like 5 million. And you bought a share at 20 million here in 2024, and now it's selling at 5 million. You can imagine how much you would have lost in total. You can a lot of money. This is what trading is all about. You are buying at an all-time low and you're selling at an all-time high. You get. So you can't be buying when price is here. You can't be buying Bitcoin at 60,000 here and expect to make profits when Bitcoin tanks to like 10,000 here. It does not work that way. You want to buy Bitcoin. Imagine those people that bought thousands of Bitcoins when Bitcoin just came out, 2009. You know, there were people that actually bought over 100 units of Bitcoins, over 100,000 units of Bitcoin for how much? Let's say $10, $5, $1. And then comes 2024, there are multi-millionaires, there are billionaires from Bitcoin. You get, they bought a particular cryptocurrency at its all-time low, and price did this, went all the way, skyrocketed in 2024, price is at $60,000. Imagine the billions of dollars you would have made on that trade alone. Same thing as when you are buying at an all-time low, because there was a time I bought Bitcoin at $60,000. Bitcoin value was $60,000 then. I think I bought up to like, you get. Then it did what? It tanked all the way to 18,000. The whole of my portfolio went down the drain. I think my portfolio then was around, I think, $34,000. It went all the way down to like $8,000. What is $8,000? I think it's $4,000. I swear to God, bro.
From 34.
From 34, yes, it tanked because I bought Bitcoin. Yeah, then it did what? It tanked all the way down, bro. I almost fell into depression. So this is what trading is like. This is how the market moves. So you want to be able to take advantage of those moves before it actually makes the big move. You want to take advantage of it before it takes the big move. There's a piece of land I bought in Delta State. I think I bought that land for about I think I bought two, 1.5, 1.5. That land today is valued at I think 6.5 million today.
For each of them.
For each of them, 6.5.
Wow.
One, 6.5 million.
You bought
Now,
it when?
I think I bought this like 2021.
Are
Yes.
you serious?
Yes,
Oh,
I did. I bought it at 2021. Now it's valued
that's
at
3 years,
6.5.
3 years ago.
Yes. So you can imagine, and the plan I had was to like acquire like five then, but the agent was misbehaving, so I just like left that one there. You understand? So you can't compare the price of then now. I think I was doing a project. There was a building I was constructing there. And when I bought cement then, I bought cement then at what? 4,800. No, sorry, 3,500. I bought cement at 3,500. How much is cement now?
6,000 or so.
6,000 or so. Now you can see that the price skyrocketed. The value of a bag of cement skyrocketed. You get, I don't want us to rush into trade. I'm taking it slow. I want you to understand the whole concept of
Yeah.
everything, of foreign exchange price and the rise and fall of a asset and all that. So I bought a cement then 3,500. Now it's selling at 6,000. Now imagine you were investing in cement. Imagine maybe you are selling cement and you had like two trucks of cement. You bought them each at 2,000 naira each, and you have over 500 cement stacked or something. Or let's say you're supplying cement, then you add them in your warehouse stacked. You bought them at 2,000 naira. Now cement is selling at 6,000 naira for each bag. You can imagine how much profit margin you make in that time period. And all this occurred within just how many years? 3 years. Same way you buy your Ethereum at so price here, and then you hold it all the way to this place, and then you sell. That is how trading is. You understand? That's how trading is. So we have different types of currency pairs that we trade. We have the Euro USD, which is the Euro currency against the United States dollars. We have GBP USD, which is your GBP Great British Pounds against the United States dollars. So these are the world dominant pairs. The world dominant currencies: US dollars, Euro, pounds, Japanese yen. Is Japanese yen there? But I shall know Euro is one of the world strongest currency. Euro, British pounds, and US dollars. These are the major currency pairs that we have. The major currencies that we have in the world that a lot of us trade. That if you is used you need to always have US dollars. Most of the conversion rates and all that, most of the um things that we do, most of the things that we buy online, most of the things that we ship overseas to here, it's usually in dollar we pay. Are you listening, bro?
Yeah, yeah.
So now, I just hope you understood this concept, because now I want to start going to the technical parts of this thing of trading. Now let's go to the technical parts. I don't want to rush it. If you have questions, you can ask. You can ask.
For sure.
Okay, technical aspects of trading. We have a technical aspect. Now, if you want to trade anything at all, you need to know where price is coming from and where price is going to. You need to know the movements of that particular asset. You need to understand how it has been doing over the years, how it has been doing recently. Now, there are terms I'm going to be using, and I'm going to be explaining what these terms are. There's what we call price action. Have you ever heard of price action?
No.
Okay, good. Price action. Price action simply means the movement, sorry, the movement of price, what's all this? The movement of price of a particular in a period of time. So price action simply means the movement of price of a particular asset in a period of time, in a specific period. So if in 2023, the movement of Bitcoin is like this, it went all the way up here, then it did this, it started tanking, 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 then it started moving sideways. Now, this is a graph of Bitcoin, then it started going to the upside. This is what you call a price action. Have you seen a price action? Have you seen this before? I'm sure you have seen something like this
Yeah.
before. Now, all of this is what we call price action. What has price been doing over a period of time? What was it doing last year? What was it doing this year? What was it doing last month? What was it doing last week? That is what you call price action. Now, for you to understand trading, you need to understand price action. You need to understand the movement of a particular asset. You need to understand what it has been doing. Where was it coming from? Is this where it was coming from? Okay, price was coming from here. Price was coming from here. Then it did this. It went all the way up here. Then it came down all the way down here. Came all the way down here. And now it's going back all the way up here. Yes, sir. This is price action. Please, if you are confused, just let me know.
Good thing.
You are getting me? Okay, because I'm taking it as slow as possible. So now once you are able to understand this price action of a particular asset, you will tend to be able to predict where it's going to next. That way, you can speculate where is price going to. Is price going to come here next? Is price going to come here next? Or is it going to go up here next? Or is it going to come down and then go up? You know how to predict the market, because whatever happens in the current price action, it has occurred before historically. Let's say many years ago, many months ago, that same price action has occurred. So you are simply just replicating it. It's just that it's happening over again. That is it. Market happens over, it repeats itself. Market repeats itself. You understand? It repeats itself. That's why we are able to predict it. No one can see the future, but with
Of course not.
data, with analysis, we can speculate. We can say, okay, this is where it's most likely going to. That is why it is never 100%. It is never 100%. It is 50-50, because you are working with probability. Because it's not certain. You don't know. You've not seen the future. You've not seen what is going to happen. But you are just working on that probability that, okay, this might not will, might play out. This might play out. This might not play out. This price might do something like this. It's not price will do something like this, because now you might say, okay, price will come here and start buying. Then all of a sudden you see price do something like this, boom. Then do like then keep selling. You understand? That is why we want to work with the right data to get as much probability as possible. Your probability want to be around 70%, but never 100%. 70, 80%. That's why you can never win all of the trades. If it is so certain that we would be able to see how price action is going to play out exactly 100% of the time, we would all be rich. But that is not possible. We're working on that probability. Are you getting the whole point? Are you getting the whole idea of what I'm saying?
Yeah. Yeah.
Okay, good. So now we've known what price action is all about. What we want to talk about next is the types of movements in the market. Let me take this off. I'll send you the recording though, but please still try to
Yeah, no
note
problem.
down some things. The three types of movements. Types, market structure, types of market structure. Now, what we are looking at next is what types of what market structure, how the different types of ways that market moves, a particular asset moves. Okay, are you following?
Mhm.
Now, number one, we have what we call an uptrend. Hope this is not too much information for you
No, no, no.
for a day. Okay, we have what we call uptrend. We have what we call downtrend. And we have what we call ranging markets, a ranging trend. No, a ranging market. Let me use a ranging market structure. Now, these are the three types of
Ranging
market
markets
structure.
or ranging. You're just
Sorry?
changing. Ranging markets or what?
No, just a range. Like this is an uptrend market, this is a downtrend market, this is a ranging market. They're all
Okay,
under what types of market structure?
market structure.
Yeah, they're all
Okay.
under types of market structure. Types of market structure. We have the uptrend, we have the downtrend, and we have the ranging markets. So now, these types of market structure, this will tell you what price is doing, what trend is following, because there's a rule that says follow the trend. You want to follow the trend of the market. You don't want to go against the trend of the market. If market is going to a particular direction, to an up, if it's going up, you want to go up with the market. If it's going down, you want to go down with the market. If it's ranging, you want to stay away from the market.
Okay.
Do you get? So if Bitcoin is going up, what do you want to do? You want to be buying. You want to be buying. You don't want to be selling. If it's going down, you want to be selling. You don't want to be buying. Because
Really? I thought going down is an action for you to buy in case it goes
now,
back up.
now, now, there are different case scenarios. If you are trading, because if you are buying to hold, you want to buy when Bitcoin has come down. That's when you buy.
Okay.
Hold.
Okay.
But we are talking about trading. Look at the topic, trading.
Uh-huh.
Okay. Now we are using Bitcoin as a case example, as an asset. Bitcoin is a cryptocurrency asset, right? So
Uh-huh.
when it comes to trading of in the market, you can either buy or sell. You can either sell Bitcoin or you can either buy Bitcoin. You are trading it for another currency in the market space. So if you are buying Bitcoin for USD, someone is buying your Bitcoin to give you USD. You get. If you are selling Bitcoin, you are selling Bitcoin for USD. You get. That is how it is. In the market space, you can either buy or sell anything. You can sell crypto because if the thing is that if you are making profits, if you are selling a particular asset and you are making profits, someone else is losing. If you are buying Bitcoin, so if you are buying dollars and dollar is going
Uh-huh.
up, the person that sold dollars to you is already losing because dollar is going up and he went to sell. So he will be losing money. So it's not that it's magic. You just come to the market space, trade and make money. The thing you are selling or you are buying in your trading platform, someone is buying it, someone is selling it. So if you are selling and then the price starts going up and you are losing, the person that bought your pair is making money while you are losing. So it's not magic. Before I used to think that But we always buy this thing that we're selling, this USD, Euro USD, this thing, this Bitcoin that we are going to buy, we are going to sell. Who are the people that are controlling this whole thing? Who is bringing out? Where's the money coming out from? We are simply exchanging in the remember I told
Yeah.
you about exchanging of this thing assets.
Commodities. Yes.
Yes, that is what we are doing. So you just come on your phone, take one trade, then you start seeing profits. You are making money because someone else is losing. Someone else is losing. That's why you are making money. You get, if you are losing, someone else is making money because the person you exchanged it with is already losing or making money. That is how it is. So when it comes to the uptrend, this is how market moves. Market moves in higher high, higher low. Market moves in this kind of direction. You can Does market move like this, straight up to the upside like this?
No.
No, markets will never move like this. Never. Never. Markets will never move like this. It can never be a smooth. If you look at any graph, any this thing, bar, any chart, this thing, whatever, of a particular asset, maybe a stock
Mm-hmm.
and all that, you always see something like this. Let's use the line charts. You always see something like this. You always see something like this. You understand? You can see that this thing is going down, but it won't be smooth. It won't be straight. It won't be in a slopy line. You get? It will be going down, but
Yeah.
it will be giving you price action. This is what price action means. The movement of price. See, this is price action. But it's still going down. But it's going up, going up, but it's going down. It will keep going down. Yeah. So that is how it is. So you can't have a perfect movement of the market like this. No, it does not work like that. So what will market do? Market will do something like this: go up, come down, go up, come down, go up, come down. It might still even go like this, still come like this, but to go up, come down, go up, come down. It might range, but to still go up. Now, this is what we call an uptrend.
Okay.
Because now it's giving you new highs. It is giving you new level. This
Every
let's
time it goes up.
Yeah, so let's assume this is $100 here. Then if price come down here, this $50.
Mm-hmm.
This $50. But what will it do next? It will give you $150.
Okay.
Then to come back down to $100. Then to give you what? It will give you $200.
200.
You get this $200 here. So price might get to $200 and then it starts misbehaving, starts ranging around here, ranging and go all the way back down to $100. It will go all the way back down to, let's say, $150, go all the way back down to $100, go all the way back down to even $50. Then to do what again? Boom, give
Shoot
you a
up.
new high, give you a new high. Now this is $200. Now this is already $250.
Mm-hmm.
Then what would you do? To come back down, give you $200. Then what will you do again? To go back up, give you $300.
300.
Then to what? Come back down to $250. Start ranging within 250 and let's say this like 280 or 270 something. Then this 300. Then what do you do? It broke out. Boom, gives you $350. This is how market moves. This is how market moves. Market will not give you $100, $200, $300, $400, 400, 5, 6, 7, 8. No, it will never do that. Do you know why all of these things are happening? Because people that bought here, people that bought dollar here, let's assume dollar was $50 here. Let's assume this was
Mm-hmm.
$50 for dollar. And then it got all the way up to $200 here.
Mm-hmm.
And then you see something like this. Can you tell me the reason why this happened? Just give me anything that comes to your mind. Why do you think it happened?
When it goes up to 200 and it starts
Went up,
falling again.
yeah, it started falling. Why did it happen?
Uh,
Just
I don't
guess.
know. The demand for it gets high.
Okay, now look at what happened. The people that bought here as $50 here,
Okay, they
when
are
price got
selling.
to $200, they sold.
Okay, they
You
are
get.
selling.
So let's assume you bought a land for like 5 million naira a year, and then the value of your land got up to 20 million. You sold your this thing, your land here at 20 million. Then when you sold, a lot of people were selling with you at the same time. Then it's tanked all the way down back to $50. Now new people started buying from here. New people started buying from this place.
Because
People
the
started
supply is
buying.
higher than the demand. That's why
Yes.
it's falling.
So people started buying. So demand now was not high. People started buying, buying, buying. Now start going up, going back up. They sold here, but the demand is more than the supply. So people bought, it came back down, but they still bought again. It went back up, came back down, still bought, still keep going on. You understand? Same thing. Same thing with the downtrend. Oh, sorry. My bad. What am I doing? Same thing with the downtrend. When the supply is too much, what happens? Hmm?
The price starts falling now.
That's falling. Good. Good. So now, let's assume this is Bitcoin. We have 8 minutes left. Okay. Let's assume this Bitcoin has 60,000. And in the marketplace, you saw Bitcoin at 60,000. And then it does what? You sold it here at this precise entry. And then it starts doing what? Start selling. Start selling. Do you want to be buying in this market? Let's assume this is 60,000. Okay, let's assume this is 1,000 naira. No, 500 naira. This year is what? 450. This year is 400. This year is what? 350. This year is what? 300. It went back up to 350 again. Then this gives you what? This gives you 250. Then it came back, or it tanked all the way down, gives you 250. Yeah. Gives you what's here? 200. Yeah. Gives you what's 150. Yeah. And then gives you what's here? 100 naira. So you can see this market that is going up, that is increasing in value. You don't want to be selling in this market. You want to be buying. So you want to be buying when price comes down a little bit. You want to be buying here. You want to be buying here.
Okay.
Buying here. These are the places you want to be buying. You want to be buying here. You want to be buying here. You want to be buying here. Now, do you want to be buying here? Do you want to be buying here? If you buy here, price gives you this. It will go down. You will lose. Buy again. It will go down. You will lose. Buy again. Go down. Lose. Buy. Lose. No. So you want to be following the trend of the market. You can see that this thing is selling. So what do you want to be doing? You want to be selling with it. You want to sell here. Then price goes all the way down, comes back up. You want to sell here again. Price goes down, goes back up. You want to sell here again. Price go down, goes back up. You want to sell here. Then hold it to price comes back up. But you still want to sell here again. Like that, like that. You want to be selling when price is giving you small retracements, then you sell. You don't want to be buying in this market and you don't want to be selling in this market. Are you getting the whole illustration?
Yeah.
Good. Now, this is the uptrend, this is the downtrend. We want to follow all this trend. Now, we have what we call a ranging market. This is a ranging market. Now, I'm going to explain what a ranging market means. Now, you see this uptrend. It means that what buyers are active in this market. The demand is more than the supply. Now, in this downtrend, sellers are more active in this market because the supply is more than the demand. But now, in this ranging market, we don't have active buyers and sellers. Because if we add active buyers and we add active sellers, this is what will happen. Market will give you a trend like this. Give you a trend like, but here, none. Let's assume this is $200. Let's assume this 200 naira. And this is what 100 naira. You can see that price is ranging, is consolidating within this price. So it's not going more than $200. It's not going less than $100.
Less than 100 now.
So you're not seeing $80, $50. You're not seeing $150. Sorry, you're not seeing 250, 300. So if price goes up to $100 to $200, it will come down to $100. If it goes up to $200
Go
again,
back to 200.
come back to
Come back
$100.
down.
Goes up to 200, come back to 100. Goes up like that. Until what? And you want to stay away from this market. You don't want to buy here. You don't want to sell here because you are not sure where the market is going to go to. You don't want to be buying, you don't want to be saying, you want to wait till you see something like this. Maybe you see a breakout like this, boom. You know that okay, it seems the supply now is now more than the demand. People are now selling. You see $100 here, the price gives you what? It gives you $50 here. You know that okay, this is what price is going to start doing. Price is going to give you small retracement and then give you this thing, let's say $20 or something. Yeah. Then you want to start selling. You want to start selling with them. You want to start selling from here. You want to start selling from here. The price retrace again. You want to sell again. Like that, like that. Okay. So you don't want to be trading a ranging market. Price does this, you want to sell. Like that. Same thing if price does this, goes all the way up here, and then does what? Gives you this, and then start buying. So you want to start buying. Because now this breakout means that okay, it wants to start selling. This breakout means it wants to start buying. Then you want to do what? You want to start buying from here. From here. Start buying here. Now, price got to $250, came back to 200, you want to buy. Got up to $300, came back to $250, you want to buy. Like that, like that. Please, do you understand? We have just 2 minutes left. Our class is
Yeah,
over.
so what I want you to do for me now is I want you to write out, I want to take a screenshot of this stuff. But like before I take a screenshot, I want you to write out here this uptrend where the demand is, this is for buyers, I mean, where the demand is higher than the supply, and this
Yeah.
downtrend is where the supply is higher than the demand. Could you just write it out so I can just take a screenshot? I'll just have this. Supply.
So you know that, yeah. Now let me put it here. Demand is more than.
The second one you put,
Yeah.
yeah, you put it here as well.
Supply is more than demand. Okay. Why, yeah, this ranging market, there's no active trend.
So it's best not to. It's
So
best not to. It's best to avoid this market.
best to stay away.
Stay okay. Okay. Except you notice a breakout.
Then
Downtrend or uptrend.
let's see a breakout. All right, my bro. So our time is up.
Yeah.
Yeah.
Just go with let me take a screenshot. Hold on.
All right.
Hold on. Save choose screenshot time. Gotcha.
All right.
Yeah.
Yeah, I will send you the video, okay?
Yeah, I beg.
All
Just
right.
send me
Yeah,
a
then I'll give you an assignment.
Okay.
All right, so we are done for today.
All right, no.